headline number 3, Peloton also had a very disappointing earnings week.
Right?
Bump, bump, bump.
Hits keep on.
I know. So Peloton's losses year over year in the fiscal third quarter grew $757 million or $2.27 per share versus $8.6 million or 3 cents a share just a year earlier. Its revenue dropped to $964.3 million from $1.26 billion. And the new CEO, Barry McCarthy, according to CNBC, said that in addition to expanding subscription revenue, the company now plans to sell its products through third-party retailers, a step that the company has not yet taken before. Mike, let's go to you first. I got to hear, what do you think about this move to sell through third parties? Can Peloton maintain the brand cachet if you can now get them inside a Target, for example?
I think they have to. I feel like, yeah, really? I feel like, look, back to kind of a theme here. This is a company that, is a great output of the pandemic, people at home. I think when you look at it, I think it is actually more of a service company than a hardware company. Obviously, the money's coming through the bikes, but really it's the service in the community that makes it, that is differentiating for the business. I actually don't think the bike itself is all that differentiating, or some of the other if you will, the physical infrastructure. Mm-hmm. I think this is a really hard pivot for them. I think they face a really hard pivot, because I think moving to, hey, we're going to be a subscription-based model. We're going to go through third-party retail. You talked about, you shared the losses. I believe the more interesting play here is consolidation in the space. And I think Peloton has probably done a sufficient to effective job of branding. It's the leading potential brand in that space. Mm-hmm. I think it needs a structural solution versus operation, what I'd describe as continuous improvement.
So your take, if I summarize that, is that they kind of have to do this, or possibly look at an acquisition here at some point down the road as well. Okay.
Yeah, merger, acquisition, consolidation of other players. I just, I don't see the space, back to I don't see the space continuing to grow massively. Mm-hmm. I think we're going to have a slow growth. As big as it's been. Yeah. As big as it's been.
Same point.
I think the subscription model is the recurring revenue that you would want.
Yep.
How do you lower your overhead and your infrastructure costs to have a very profitable subscription business? And I think that ultimately then gets into the question of, I think other providers of the similar competitors haven't had the brand effectiveness, the consumer awareness that Peloton has. So that's where I think there could be some synergies in place.
Right. Absolutely. Okay. I'm dying to get what Ant's take is on this, but Dave, what do you think? Do you agree or disagree with your colleague, Mike?
No, so I slightly disagree. Listen, I think the wholesale channel might be a desperation move, but controlling your brand in the wholesale channel is tough. I was actually in Nordstrom's this weekend, and they had a tonal set up, and it wasn't great, right? It didn't scream the Peloton experience, right? So I just think that's a tough from a brand proposition. I agree with Mike, however, though, that it might be necessary just to try to get as many points of distribution as possible. Given the kind of economic hardships that they're facing. The other thing I thought was interesting was on the subscription revenue increases, what he really is saying is price increases, right?
Yeah, right, 100%.
There's almost no world where they're going to grow off the pandemic kind of peak. So price increases in the kind of economic environment that we've talked about on this podcast the whole time just feels like, that just doesn't feel like a particularly effective strategy. And maybe Peloton's customer base is more affluent and can handle it, but I don't know. Price increases in a looming recessionary environment feels kind of out of touch.
Yeah, I tend to agree. I tend to lean more with what you're saying. I think I'll be pretty candid on this one. I kind of hate this move.
Yeah.
Yeah. I really do. I feel like it's Peloton getting hung up on its own bad press of late. Because I think there's some key statistics that you can pull out from these articles. Like, they still gained 195,000 subscribers last quarter, and their attrition rate actually went down. It went down from almost 0.8% to 0.75%. That still shows me that it's a healthy brand, because again, it was at its peak and it's still growing. Mm-hmm. So why would I want to then go into a third party for my distribution? Because then you're just like Nordic Track. You're the same. You're basically devaluing your brand, in my opinion. or you're like Dave, I think the tonal example is really great, or the mirror example. I was in Lululemon this weekend. There's no one looking at the mirror. The place is packed. No one's looking at it. No one's engaging with it. And then the other thing that comes with that too, that I think is really important, you get lumpy inventory. And as we said at the outset in the first headline, then you get markdowns. And then there goes your cachet, right? Because you have to start discounting this to clear through the inventory. And so I just think with those type of subscriber statistics, and you can find the balance on the subscription revenue that Dave's talking about. There's no reason to not go direct in this example. Like build out your own stores, keep the network going through your own channels. I think Mike's point about maybe if you're really suffering or needing to find an outlet, look at a merger, look at, potential acquire or something like that. I don't like the move of third party at all.
I completely disagree.
Wow, really?
Yeah, I do.
Why?
Because I think that Peloton has been going after a very specific market. They've been going after a high earning individual. They have not been going out for mass. And
so you think they should go mass?
I'm not saying they should just go mass, but I think that they should take the approach that we've seen Lululemon, that we've seen Apple do, where you have certain retailers who you think can maintain a certain level for your brand, but also allow you, like I'm thinking of like Target. Okay. So Target they have Apple products in their stores. It's giving people exposure to the brand. And especially when you're talking about what Mike's talking about the subscription revenue. And you said too, like that's the subscription is where they're making their money. It doesn't have to be about the hardware itself. And I think that the more people that you get exposed to the brand, being able to have a taste of Peloton at $39.99 a month is attainable for people. They still get to have the power of the brand, which is in the people that are running the programming and the programming itself. Like this is a future for a lot of people of having a hybrid workout experience. And the more access that you have to seeing the bike in your Target store or in a, very selected, maybe a Dick's Sporting Goods or something, I think makes more sense than just completely keeping it in the A malls and only allowing a certain subset of the country to be able to experience that brand.
All right. Well, I want to press you on this. This is why I love this show. And this is why I love having top-notch retail consultants on actually debating the issues, which is incredibly hard to find. And last week we argued and I came to your side. So I'm going to press you a little bit on this. I would argue that it's still accessible now, like based on its internet presence. If you want a Peloton, it's pretty easy to find one. It's not like it's like being kept from certain people. So like, to some degree,
because we are in the target market for the Peloton.
Well, I agree. That's who they're marketing to. But if you get wind of it, you can easily get one if provided the inventory is there, which granted is a problem, but that's a separate point. My question to you though, is who are those retailers? Who are those retailers where you're going to place this? Like Target, you're going to have the kid that's 18-year-old in khakis selling this for you? No way. Not to say it's going to become like Nordic Trek. Best Buy, same issue. Like it's just going to become something in the sea of all. Target doesn't even carry extras equipment, but Dick's is maybe one, Best Buy is another one maybe, but then it just becomes another bike or treadmill in the lineup of bikes and treadmills. And it's going to be hard to differentiate. So I don't know.
But I guess
who are those people is my question.
I guess you're not, I think you need to make a point of differentiation about what the store experience is. And I don't know that it's going to be hardware every single time. I still think that there's a potential to create an activation with a brand partnership, for example, with a Target where you have Target and Peloton teaming up and there's a Peloton like space in the Target, or, you could have a bike there, but it doesn't necessarily mean it's about the bike. I think it's like about the subscription and getting more people exposed to like, here's a Peloton class. We're going to play it. Like people would sit and watch the Peloton class depending on who the instructor is.
That's an interesting idea. We've talked about that before. Like, could you have like actually Peloton classes where the bikes are set up for you? But Dave, Mike, any last thoughts on this one?
Yeah, I've got one last thought is I think the CEO of Peloton should start spending a lot of time in Oregon. Because Nike is I think a Nike acquisition is the smartest move here that actually makes sense from a market perspective.
Yeah, Nike or Apple. That's the other thing that I was thinking of as Ann was talking to. Mike, any thoughts?
Just this business is bleeding cash.
Yeah.
Kind of the stay the course, keep appealing to the same people.
Just might not work, right?
It's not saying might not.
Mm-hmm.
It's not.
It's not, right?
So you got to ask yourself, like, how much more are we going to keep bleeding here?
Yeah.
And I think that I think they can. I'm with Ann. I think they have to expose. The bottom line is they have to figure out a way to get greater scale. And I think one means is further exposure. I think Dave's on it with, I come back to, I think an acquisition is, or some partnership is a path forward.
Yeah, that's an interesting point too. Like that actually makes me think like I would take my rabid fan base and ask them to help us through that issue then, through the subscription increases too, as another point.